and welcome to this Astranti YouTube video where today we are going to be focusing on corporate reporting, specifically focusing in on the issue of how businesses can provide information to their relevant stakeholder groups about non-financial information in relation to their performance. So those of you studying at F2 and F3 levels will know that increasingly in terms of modern corporate reporting, the scope of this is expanding beyond just primarily focusing on financial reporting. And it's increasingly important for businesses to disclose a range of non-financial information about their operations. So to help us out with this particular area of theory, what we have for you today is an extract from one of our videos on sustainability reporting, where we are going to look at the various different reports and introduce you to the various different reports by which an entity can communicate its non-financial information to key stakeholder groups. Having said all that, we can't overlook the importance of financial information. Yes, groups like stakeholders will want to have more non-financial information about a business and its performance. But crucially, these parties are also, of course, going to want to know about how profitable a business is, how much money that it is generating, particularly if you are a stakeholder group like a shareholder, for example, who has a vested interest in the level of profits that a company generates. So the overall idea here is that we're not discounting the importance of financial information. What we're simply saying is that stakeholders are hungry for as much information about a business as they can get, both financial and non-financial. So for example, as well as seeing whether a company is profitable or not, stakeholders want to know about a business's future prospects. They'll want to know about the management structure of the business and how effective this is. They'll want information about things like the social policies and the corporate social responsibility that a business employs, and they'll also want to know about the impact of a business on the environment around it, amongst many other areas. Now, all this wide-ranging information can be reported in several different ways, and we're going to introduce several different reports now by which this can be achieved. So the first method by which this information can be reported is via a management commentary. Now this is a narrative report which provides management's view on the results of a particular period and discusses the future prospects of a business. It is an International Accounting Standards Board practice statement, and so compliance with it is voluntary. Whilst in the UK, a management commentary may be known as the operating and financial review. So if you see this in financial statements that you are looking at, essentially what we are dealing with is a management commentary. Now, the management commentary does not have a fixed format, but the IASB requires 5 essential elements of information to be covered within it. Now, these are firstly, the nature of the business and its operations. So essentially here we're dealing with things like the markets in which a business operates, the type of products or services that it sells, the type of consumers that it sells to. The second essential element of a management commentary is then in relation to a business's objectives and strategies. So here we're looking at where a business wants to be in the future and what strategies is it employing to get it to this goal. Area number 3 relates to resources, risks and relationships that a business possesses. So in part here we're looking at the areas, the sources of value that a business has at its disposal, so the resources but also the relationships that it has with parties like customers and suppliers and how it uses these to generate value going forward. But then we're also considering the range of risks that a business faces as part of achieving its objectives and pursuing its strategies and how it looks to deal with these. Fourth key area that requires disclosure in a management commentary relates to a business's results and prospects. So clearly here we're focusing first on how a business has done in most recent financial periods, and then we are looking for disclosures, we're looking for a commentary on how the business's prospects are expected to develop going forward based upon this. And finally, we'd then like to see information about performance measurement metrics and indicators that the business employs. So here we're maybe looking at the type of key performance indicators that a business employs to meet its critical success factors as part of meeting its overall objectives as a business. business. Now, the users of management commentaries are often identified as existing and potential shareholders, as well as other stakeholder groups like lenders and creditors. And these parties often use the information in this report to help evaluate an entity's prospects, as well as general risks and also the success of strategies that the entity's management have employed to meet its stated objectives. Okay, so we can clearly see how these uses meet up with the 5 essential elements of a management commentary that we've established earlier on in this section up here. And we can see how this would be a really useful report to stakeholder groups like shareholders, lenders and creditors to provide them with a more well-rounded, more detailed picture about a company's performance than purely consulting its financial statements. Okay, the second key way in which non-financial information can be reported is via an environmental report. Now, this is a report that, unsurprisingly, reports on a business's environmental responsibilities and the impacts of a business's activities on the environment. Now, there is no prescribed format for an environmental report, but we will often see the following information included. So firstly, we will see a business's environmental policy. So for example, if a business is generating large amounts of waste as part of its production operations, we may see its policy in relation to recycling this production waste stated as part of its environmental report. We may also see the risk management strategies that a business has in place in regards to the environmental risks that it faces. So for example, if we have a business that uses large amounts of harmful and potentially dangerous chemicals as part of its production operations, then within this business's risk management report, we may see an environmental risk in relation to something like a chemical explosion or a potential chemical leak and the impacts that this could have on both the business's production operations and crucially, of course, the wider environment surrounding these. We may also see information regarding new environmental legislation and the impacts that this has on a business and its operations. So for example, if we see government imposing something like a limitation or a reduction on the amount of landfill that a business can generate or the amount of waste that a business can send to landfill, then the impacts of this new legislation may be disclosed in an environmental report. And then very much linked to this, we may see information about any infringement of environmental legislation that a business has committed. So for example, if the above restrictions about landfill did come into effect and a business breached these and was fined as a result, then we would see details about this infringement disclosed in its environmental report. Following on from an environmental report, we can focus on social aspects of the key non-financial information about a business within a business's social report. Now, the aim of social reporting is to measure and disclose the social impact of a business's activities. And again, like an environmental report, there is no set format for us to follow, but there is a number of pieces of information that will usually be included in a report like this. So these include policies that a business has in relation to its workforce. So for example, if as part of its recruitment and employment policies, a business ensures that it provides equal opportunities to traditionally underrepresented groups, so people with disabilities or people from ethnic backgrounds, for example, then this is the sort of policies that would be disclosed as part of its social report. And equally, we may see information here about ethical policies that a business employs. So for example, this could be the business's policies in relation to things like child labour, to exploitative labour practices, or maybe things like a modern slavery statement, for example, reinforcing the business's position in regards to these key ethical issues. Now, the content within a business's environmental and social reports can be combined in a fourth type of report known as a sustainability report. Now, the Global Reporting Initiative is a body that we're going to look at a little bit more detail later on in the video, and it provides a set of guidelines regarding sustainability reporting. Now, while these guidelines do remain voluntary, they do provide a bit more clarity and a bit more information about how a business should go about reporting its environmental, social and economic aspects of its performance. Now, these additional disclosures as part of sustainability reporting into non-financial areas of a business's performance play a key role in increasing factors like transparency in regards to an entity's performance. And this then allows a better evaluation of a business's financial position, its performance and its strategies. And it also crucially builds confidence amongst stakeholder groups that all relevant information about a business's performance has been made available to it. So if you are a potential stakeholder group like a proposed investor in a business, for example, having access to the sustainability report of an entity and being able to analyze the various non-financial aspects of its performance as well as the financial aspects will provide you with a greater level of confidence about the decision you make in terms of investing or not investing in the business in question. So one small example of sustainability comes from UK supermarket giant Sainsbury's. Now this company publishes annual sustainability reports, and in their 2014 sustainability report, amongst a range of other pieces of information, they include facts such as the fact that they've reached £319 million worth of sales in their fair trade product ranges, and also the fact that the business as a whole had reduced its carbon emissions by 8% in the preceding financial year. So very small examples there, but quite useful nonetheless in terms of showing the type of content that is included in a real life business's sustainability report. So that is the end of today's extract for this YouTube video. If you're interested in this topic, if you feel it's maybe a theory area that you need to brush up on, then please feel free to head over to the Astranti website, where we have a range of great products, including tuition videos, practice questions, study texts, and revision notes for all aspects of the CIMA syllabus, including this particular area from the F3 syllabus. That aside, I'd just like to take the time to say thank you very much for watching this Astranti YouTube video, and to wish you the best of luck with your studies, whatever stage you are currently working towards.